what happened this week and where we think we're going from here. I know it's a question on everybody's mind. Dr. J, I take a look at your newest moves in the market, and it suggests that you think we're going lower by virtue of the fact that you own puts now in the Russell. Talk to me.
Well, and that was part of it, Scott. The other part was the volumes were just so light on that rally. You and I talked about it just 2 days ago that the Tuesday rally was significantly lower volume. I think about 35 million option contracts. It was lower on the stock side as well. And then you look at the sell-off, the last couple days of sell-off, and that's been on huge volume. Not blowout volume, I'm not saying that, but right back up there to 42, 43,000 option contracts, stronger volumes in the stocks too, Scott. So that tells me that there are people that just want to sell the rips, and they're not as aggressive about buying that dip. Obviously, they did buy it on Tuesday, whoever they are that did that. It had that bounce, and then both volume and volatility, those are two of the main things that we follow. Velocity's the third. Very fast turnaround from a volatility last week in the 16 range to 23 on the sell-off, and then back down to 17. And now, we're seeing a little bit of a rise today, but not back towards that 23 level at all yet, Scott.
You own the Russell the March 213 puts. That's right?
Yes, sir. That's correct. There were big buyers of those. I think like 25,000 of those were purchased just the other day, Scott.
Okay. As I said, Mr. Wonderful, it's great to have you back. It's been a while. I'd like to get your take on sort of where you see things after this tumultuous week that we've endured. More volatility, as John was just saying. He put a trade on to try and take advantage of where some big bets are being placed. What are you doing?
So 2021, the hallmark of that year was no volatility, even though it was horrific in terms of pandemic and other issues. But more normal markets are now here, and we're going to get volatility. And I would say it's because the potential of a 20+% gain isn't there this year. More likely 8% earnings growth, maybe 1% in dividends. So you're looking at a 9% year. Along the way, lots of volatility. And you've got, that print, that 7% inflation print, that nobody thinks that's sustainable, but it's still scary to see it. So that's going to put a bit of a spook on equities too, particularly tech. And you're seeing that manifest itself in these flattish to down NASDAQ days. But the inherent growth in those companies is still there. Nothing's really changed. And so I think it'll sort itself out. But I'm looking for muted returns with a lot more increase in the VIX. And so we should get used to this. And we're in a year where there's a midterm, so we're going to have lots of politics. I love all the hearings to bash tech, and we're back doing that again. And that's going to give you some volatility in the names. Nothing ever happens. It's just good sound bites for the politicians, but it still gives you volatility. So what I say, get over it and still allocate to equities, because there's really nothing else to do if you want to beat inflation. 7%, that's a lot.